Hi there, Sarah. So for Nordstrom's second quarter, it is a mixed report here. So beating nicely, actually, in the bottom line, reporting 90 cents. The street had been looking for 75 cents a share. Revenues, however, are lighter than expected at $3.87 billion. The street was looking for $3.93 billion. The company no longer reports comparable sales. However, they are giving net sales numbers. So for the full price, that's the regular Nordstrom department store net sales down 6.5%, and the off-price net sales were down 1.9%. Also looking at the guidance, they are lowering their net sales guidance for the full year as well as their earnings guidance for the full year. Despite that, shares are higher, though, by about 10% right now. Sarah, back over to you.
Yeah, looks like better inventories, lower expenses help that bottom line beat. Courtney, thank you. Charlie, you own this stock.
We do. The stock's beaten down. The family tried to buy this company out at almost twice the current stock price. This stock has been, in our opinion, hit way, way, way too hard. Expectations were very low. So I'll admit the results were only okay, but the expectations were so low that we would expect the stock to do very well.
Yeah, to your point. I mean, this was a $67 stock back in November of 2018.
Yeah.
There's little chance, it would seem at this point, the family's going to try again, I would think. They had a very hard time getting debt financing last time you referenced.
That was the problem. They wanted to buy it at that $60-something price, and they couldn't get the financing for it. So you're right, they probably, in hindsight, are glad they didn't. But we do hear that the family is still interested in taking this company private. It's tough to report numbers on a quarterly basis. There are some investments they have to make to go down that omni-channel strategy.
I know, but do you really want to add debt to a retailer in this environment? I would think that that's a very difficult thing to do when you need flexibility and capital.
Right. Retailer LBOs are not going to be 8 times debt. They're going to be more like 3 and 4 times debt. And so there'd be a lot of family money that would come in.
These guys will roll in everything. If it were to.
Yes.
And you have to ask the question. It already trades, under 9 times earnings. So you have to ask how cheap would the public equity have to get for the math to work well for the IPO. So it is a tough story, but obviously 25% of this stock is short. So basically, a lot of people betting on continued decline, and they're getting a little bit of it blow up in their face, at least after hours.